Red candles running through my brain. Click, clack, play. Get the move for the day. From the open to the close, we don't trade in the gray. Wall Street Mania, welcome to the show. Quick tips, big flips, watch your money grow. Wall Street Mania, lock in, let's ride. Little bit of game every time you slide. Wall Street Mania.
Wall Street Mania. What up? So this is my support and resistance strategy. Not supply and demand, not 5 minute. This is my support and resistance strategy. And I've been using this a couple weeks, and I think this thing works better than any strategy that I've seen or have. Reason being is because you are using a higher time frame. You're going to use the 4-hour time frame to set up your charts, and you're going to use the 1-hour time frame to execute. Now, I got this from a trader that I actually look up to on YouTube, and he is a beast when it comes down to this particular strategy. So I'm going to just basically show you guys, not to steal any of his stuff, but I'm going to show you how I personally use it. I think this thing works amazing. Chef's kiss. All right, chef's kiss. So what we're going to be doing is we're going to be looking for a support and resistance on the 4-hour time frame, and we are going to wait for price to touch it, and we're going to go down to the 1-minute time frame to enter in, and I will show you guys how to do it. First things first, how do we find our 4-hour zones? I call them hot zones because imagine this. If you touch a hot stove, what happens? You react off of it. Your hand is blistered, you move it, you probably got to go to the hospital. All right, if you touch the stove, it's hot. So I'm looking for a 4-hour hot zone, which is a resistance or a support zone. So what do? Any area where price left, I'm talking it left, we're going to mark out that particular zone. And how do we mark out the zone? Let me show you. I personally do this. Any area that left, I'm going to look for the opposite color candle. So this black candle before the big move up. And I'm going to mark out the body all the way down to the wick. So the lowest body part of it down to the lowest wick. And I'm going to stretch that out. And that is my 4-hour hot zone, AKA this is a support zone. All right. Because price touchdown is supporting. And then resistance, if you're trying to get out, support and resistance. So don't try to challenge me and be like, you don't know what support and resistance is. I do. All right. Go cry to your mama, huh? So this is my hot zone that I like to call it. We all like to call these things different things. Same thing. Price was here and then price left. So guess what I'm going to do? I'm going to mark out the opposite color candle, the body all the way to the highest wick. And then I'm going to push this out. Bada bing. Same thing. Price was here and price went up. So what am I going to do? I'm going to mark out the black candle all the way down to the body of the lowest wick. And I'm going to stretch that one out. And as you can see, perfect example, price came up, came back down, touched, and went up. You would have definitely made money right here. That is moolah. Let's see, coming over here. So price was here and then price went all the way down here. Okay, cool. So I'm going to see the opposite color candle, which was this white candle right here. I'm going to mark out the body and I'm going to stretch this thing all the way over here. As you see, once it hit, start going back down. Coming over here. Now, does it do this all the time? No, it's the market. The market would be crazy to follow its rules every single time. Then everybody would win. They don't need that. They don't want that. No, don't be stupid. On a higher time frame, such as the 4-hour time frame, you are definitely going to get results better than you would on a 5-minute support and resistance zone or a 15-minute. The higher the time frame, the better results you're going to get. Understand that. Let's say we didn't have this part right here and we had this. See where price went all the way up from here? Guess what you're going to do? Mark out the body, the lowest wick. The lowest body to the wick. And you're going to move this all the way over. And look what happened. Price went up, came all the way down, reacted, you would have made money here. Reacted, you would have made money here. And then what price can and will do, I'm not necessarily a big fan of it. I have done it I like just more bounces, but a lot of times a support zone will get broken through and then become resistance and bounces off. You can do those as well. Me personally, I like to just look for support zones, support and resistance zones, but you can definitely still play this as well. All right. Same thing. Last one. Price was here. Price came all the way down. Price came all the way back up. So guess what I'm going to do? I'm going to mark out opposite color candle to body, and I'm going to move that over. Now, this strategy is, you do have to wait. I'm not going to lie to you. You got to wait. And it's not always fun, but the waiting part is cool because once it actually gets in your area and hits, boom. It's pretty dope. You get a good reaction off of it. Same thing. Last one, price was here, shot down. I'm going to mark this out right here, and bam, that's it. So now that we understand that, let's go down to a 1 minute time frame and see how do we enter our trades. Bam. So on a 1 minute time frame, you guys have to know what swing highs and swing lows are. What I'm going to do when a price touches my area, that's weird. Ew. Price ain't touching nothing on me. Anyway, when price touches an area, see this area right here, this high, or this high, or this high. I'm going to wait for a swing high or swing low to be broken, and then I'm going to enter in, and I go for a 2-to-1. My boy Pete, that you guys have seen on my TikTok channel, if you guys follow me on TikTok, when he took his first trade, he is a killer with the 3-to-1s. I personally, I like to take my 2-to-1s or like a 2-to-5, 2.5-to-1 as well, which is like, why don't just hold it for the 3? 2-to-1s are solid. It blows. I mean, it'll definitely hit on a freaking 1-to-1. We don't do that. We're trying to double our money, double and triple our money. So what I'm going to do is I'm going to wait for a high such as this one to be broken. So if price came down in my area and then it broke, I'm going to enter in. My stop loss is going to go under 6 points under my low, and then we're going to route that out to a 2-to-1. For example, let's see the trade for today. So the trade for today was this. Let's clear these out. This was on MYM. And this thing works great on this thing works great on ES, and it works excellent on YM as well, or MYM and MES if you're a futures trader. I've seen the person I watched do it on NQ, but I'm scared of NQ. I'm petrified of NQ. I'm gonna go cry to my mama. Anyways, so 4-hour time frame is what we're gonna look at. Bada bing, bada boom, bada boom, bada bing. And we are here. So if we're looking at this particular thing right here, let's just do a replay. And we are, no, I don't need no reviews yet. Boom. So we're on a 4-hour time frame, right? So price was here, price went up, price went down, price went up. So price left this area. So what are we going to do? We're going to mark out this from the body to the wick so you guys can see it. And we're going to push this thing all the way over. And again, this is my 4-hour hot zone. And I'm going to wait. Same thing. This area right here, price was here and price was up here. Price went boom and it went down. So guess what? Technically, this is a big zone. And you can even tell right here where price is kind of messing around, and you just move that one over. So this is a good reaction zone right here as well. Now, again, I use this strategy from time at 8:30. I have seen this thing work at 6 o'clock and 7 o'clock before the market opens. And even before that, sometimes at 12 and 1 o'clock in the morning, which is crazy. I'm taking it when it's more volatile, when I got more people in the market, but you can definitely do it this way. But once again, we had price come down here to this zone and then move up. We're going to mark this particular zone out. The reason why I'm looking at this zone is because this is after market open. Personally, I'm not taking anything unless the market opens. So now that my computer is wanting to work perfect, now let's do this. Boom. So our zone is right here, and right now it's about 850. The market opened at 830. So now what are we gonna do? We're gonna wait for price to play out. So boom. And again, with this trade, we're just waiting. We're not doing anything until our areas are touched. And how you do that is you can mark out an alert and just put an alert and wait for price to come in and enter it. And then once it enters, perfect. Then we execute. So now that we're in the zone, let's mark out some highs and lows. So price came down, went back up, went back down. So this right here, let's use this one. This right here is a high for me. All right, price went down, went up, then went down again. Well, price went down, then it went up, and then it went down. So this right here, this is a high for me personally. I would have taken this one. This is a more safer entry, to be completely honest, but I would take this one right here. So now what we're doing is we're waiting for price. We will set a buy order, not when a candle closes or anything like that. We are literally setting a buy order or a sell order, and we want to be triggered. So now price came up, it went down, it never touched it, but what did it do? It created another swing high, an internal swing high. The reason why I know that, because price went up and then it sunk back down. So guess what? This right here, and let's replay it a little bit more. Boom. This right here is a new high. So now I'm like, cool, I'm going to set an order whenever this gets broken. So it'll look like this. And I'm not really looking for 2-to-1 just yet until my trade enters. So now when it hits, boom. Technically, I'm triggered in. So what I tell you guys, you want to do 6 points. So I'm going to go stop losses here. We don't want our stop loss to be even. We want it to be 6 points under. So right now, 94, 95, 96, 97, 98, 99, and then boom, 100. So we're right at 100 points, okay? That's where I want it to be at. And at that point, I'm going to set my, boom, hold on, bam. Sorry, y'all, let's redo this over. So we got 6 points. So right now, stop loss is even here. So you guys can see this. See how that's even? We want 6 points down. So 1, 2, 3, 4, 5, and 6. So 6 points, that's where my stop loss is going to be at. And then I'm going to carry this thing up, and we can get rid of all this crap because we don't need it right now. Boom. Boom. Now I'm going to ride this thing out for a 2-to-1. Or as Pete did earlier, he wrote this out for a 3-to-1. Right? So now what you're going to do is you're going to wait for this trade to play out. Now, here's what I do personally with this trade. One, I don't watch my trades no more because it's too stressful. And then you make dumb decisions when you watch your trades. So the second thing I do is I set an alert at a 1 to 6, which would be right here, as you guys can see. I'll set an alert right here. And the only reason why I'm setting this alert is because when price reaches this area, that's when I'm going to move my stop loss up to break even. And I'm going to ride it out. That way, I don't want to be all the way up to a 1.7 or a 1.8 and this thing double back and I lose. It's just stupid. It's pointless to lose money like that. So around a 1.6 or wherever you feel comfortable with, set an alert. And then once it hits it, then you move to break even so you can ride it out for a 2-to-1. So now let's see how this whole trade plays out. So price comes up, comes down even more. And this is exactly what happened today. Like, this was a crazy freaking trade. Never hit. And then guess what? Takes off. Took a minute. And then boom. Dominated. 6 points. 6 points on this particular trade. 6 points. So on this particular trade, you would have basically said that I'm going to risk $100 to make $200. And my boy Pete wrote this thing up. Now, some areas that you can hit are swing high areas. So areas like this I'm gonna aim for. Areas like, I'll say this I'll aim for. Areas up here to aim for. And this thing just kept going. Sunk down a little bit, but then it kept going. All right. So that's money that you could have made. And if you would have wrote this thing all the way up, you would have basically betted $100 to make 341, which would have been an insane freaking day. All right. So hopefully this strategy kind of, because I don't want this thing to be long, and we'll do another example of this. And I say this particular example is because areas like this, where price drops off, this is the area that you want to watch. I've charted this and notice usually when price hits this area, it reverses. So I'm going to show you guys real quick. Boom. So we're going to replay it as if it never happened. So like right here, let's go all the way out. So we're going to act like this never happened. So what do? Start off, we go to our 4-hour time frame. So you see where price went up and then down. Price left this area. So this right here is a hot zone. And then price was here and then it dropped down here. This particular consolidation area is a hot zone. All the way to the highest wick, but I'm gonna move this over and kind of move this over like this. So boom. So this right here is a legit area, all right? So now, what am I doing? Go down to the 1-minute time frame and I'm gonna wait for price to hit this particular area. This video is already 19 minutes, so hopefully you guys are watching it. So, price comes up and touches this area around 8:30. As soon as it touches the area, I'm going to wait for a low to get broken. Now, the unfortunate part is this is a low. And if price came all the way back down, that would be a really big stop loss. Would I take that? No, that's too big for me to go for a 2-to-1 on. And I'm going for 2-to-1s minimum. So I'm going to wait and see what price does first. Now, look what happened. Price created this particular low. And I necessarily wouldn't say that this is a low. This is my boy Pete's. That's more of his low. Like he would have got in. I would have actually waited more for this one to be broken. And if this one didn't break, or if it was just that big, I wouldn't go take it. But then price does this. Price comes back up. And then you see how this low is created? So now my entry is here. And I'm going to wait for this to be broken. And then price went up. Price went down. Price went up. This right here now is a low. So as soon as I'm triggered in here, guess what I'm going to do? Entry is going to be right here at this line. Stop loss is going to be 6 notches above. So it ticks 1, 2, 3, or 2. Geez, I can't count. A, B, C. 1, 2, 3, 4, 5, 6. So boom. And then my TP is going to be at a 2-to-1, right? Remember how I told you guys we're going to do a 2-to-1. I'll go for a 2-to-1. The reason why I wouldn't take this as a 2-to-1 is because of this freaking low. It's something about lows like this where there's nothing for it to catch on to. On the other one, if you rewind it, you will see that there was a bunch of swing highs and swing lows that were close. The next swing high or swing low is over here. So it's this huge dip. And this dip for me is very dangerous. So what liquidity likes to do is sweep under this and then reverse. So what I would have done is I would have taken my trade and I would have taken it to about right at the bottom of this before this big old opening. Now, what I did do on this one, I did lose it because I was like, you know what? I'm going to take the risks and then it reverse. But what you're supposed to do with these particular ones, because I've charted this thing enough, if you see a big push up and it's open, ride it out to the bottom of it. And if I would have rode it out to the bottom of it, which I did, boom. At that point, you would have made $220 of risking 132, which is a 1.67 trade. Because after that, the market reversed. It swept under this hole of liquidity and it grabbed it and it pushed up at that point. You see what I mean? So, and if you see, it came right back up and you would have lost the trade. So just a hair under the freaking 2-to-1. So boom. So I hope this made sense for you guys on how to mark these things out. Once price hits a zone, and this is a random one, but we'll just say it. Once price hits a zone, we're going to wait for an area of consolidation or a swing high or swing low, and we're going to mark our entry. And if that doesn't get triggered and it creates another high or low, guess what? I'm going to wait for that one to be triggered. And then when price finally comes down, I'm going to enter in on a trade. My stop loss is going to be 6 notches above. So we got 1, 2, 3, 4, 5, 6. And then I'm going to just ride this out for a nice 2-to-1. The reason why I know it's a 2-to-1, because it's going to say 2-to-1. Boom. And then all I'm going to do is I'm going to wait for it to get hit. And as you can see, price did. It smacked it. Boom. You would have made money. And for me, again, once I hit about a 1.6, I'm going to move this thing down to a break even. So I'm at a risk-free trade. I'm going to let this thing play out. And if you wanted to, you could have rode this thing all the way down. But I am scared of this. So I'm just going to kind of ride it right there. So without further ado, that is the video, guys. I'm going to kind of chop this thing up for you guys, but hopefully this made sense. Subscribe to the channel. You can reach out to me on TikTok and everything like that. But hopefully this video makes perfect sense for you guys. If it does, leave me a comment. But love you guys. Keep God first always, every day and every night. Peace.